Hi, I'm Sanket, the founder of Synapse. For people who don't know what we do, I thought I'll take 30 seconds to explain. We're providing a banking platform to fintech companies. The idea being we want any technology company that doesn't have a banking charter be able to provide financial and banking products. What we've done so far, we've built out about two buckets of banking. One is payments, so being able to process ACH wire, card processing transactions. And the second bucket is deposit accounts, so being able to open up deposit accounts, issue account routing numbers, and issue debit cards. What I'm about to show you today is a third bucket we've been working on for a while, which is lending. We want any technology company to be able to originate and service a loan. So here's how it really works. What has happened so far is some user has gone to a fintech company, finished their KYC, and set up a deposit account. Now they want a loan for something. So they get redirected to this platform. Right now it has Synapse's logo and colors and branding on it. This literally can be dropped into any fintech's application and have their own design, their own logo. The first thing we do is we just verify the identity of the user with any of the registered devices that they have with us. So phone number, for instance. It sends a 6-digit PIN code to their phone. We verify that. As soon as that happens, we start analyzing and figuring out if we can actually approve them for this loan. All of the decisioning is custom here, so it changes platform by platform. So we just host the scorecard that the platform gives us, and we verify and validate the user as a function of that. In this case, the application that I'm showing you is a flat APR application, which means it doesn't matter if you pay the loan early or late, you're only going to be paying one flat fee. Based on that, our recommendation is to choose the middle option, which means pay about $105 every month for next 6 months, and you would only pay $52 as interest. So I'm just going to select that. It gives me a good breakdown of, okay, I'm going to be paying about $105 for next 6 months. I'm only going to be paying $52 in fees, no more, no less. And it shows me basic math here. Since I'm already a customer, I have all of my payment methods registered here as well. So I'm just going to choose my checking account. This is the account where the money is going to get debited every month, and also the account where the $578 would go as well. Then I can name this loan whatever I want. So I'm going to say I'm getting this loan for a new phone, agree to all of my credit disclosures and loan agreement, and that's pretty much it. I get approved for a loan, and the money gets sent to my bank account. Traditionally, after this, the user would be sent back to whatever platform's interface is, but I also wanted to show the loan servicing portal that we've built out as well. So now I have about 4 ongoing loans with this platform. I've taken about 2 loans in the past that I've paid for already. This is the new phone loan that I just originated. Once I click on it, I can see my progress, I can see what my next payment looks like, and I can see when my payoff date is. If for some reason I still want to go and grab all of my existing loan agreements and documents, all of them are sitting right there as well. I can just click over there and make a payment today. If you would just notice, this bar kind of looks funky. I have about 50% of the bar that's my next payment, which is $105, and the remaining balance, which is $526, is about less than half of the bar. And the reason for that is we wanted to discourage people to pay the amount that they don't owe us today, because how I said, this is a flat APR fee setup, so it's not in the consumer's best interest to pay up in advance. So as soon as they're going to start going over this limit, we show them that notification as well. We tell them this is probably not in their best interest to pay up this money in advance. If they still want to, they can do that. I probably won't do that right now. Another novel feature about this is the next payment date. As we were doing more research while building out this product, it seemed like adding a late payment fee really didn't incentivize users to pay on time or pay early. It actually disincentivized most people to pay their loans. So we didn't want to create that kind of anxiety for customers. So what we did was we added a snooze option, which means anyone can snooze any of their loan payments by 2 weeks, which is on an average a pay cycle for anyone. So if this one's due on May 12th, I can go all the way to May 27th, and I can just snooze this payment. So I wouldn't get a return. The payment would now go on the 27th. The user is going to get a text notification alerting them that the payment isn't going to go on the 12th, but 27th instead. Also, if at any point I want to change my payment method, either I can add a new one, or I can just select from the existing list and just update my payment method as well. Either way, everything is managed completely here for the user. There are a couple of interesting value propositions in this product. Number one, all of the regulatory complexity is taken care of by Synapse. So we're going to make sure that your users get their loan agreements, their credit score agreements, everything sent to them. We would make sure that we remind the users as well when their payments are due, and we would also make the initial collection efforts as well. Everything's completely automated. On top of that, unlike other SaaS companies, we don't just give you the software, we also bring in the banking partnership. So all you have to do is just come to Synapse, you can set up deposit accounts, we bring in a banking partner. If your consumers need loans, you can apply for loans, just integrate your loan product in there as well. Just one-stop shop for everything. That's it, that's everything. Thank you.